Welcome to our Monday live stream. This is your host, Edwards, here with the amazing finance, money, and winning expert, Dinh. Dinh, how are you today?
Good. I'm ready for you. I've been preparing for you all morning. Had a great weekend. It was so hot this weekend because we had a little bit of the rain on Saturday. And, it's been so hot for the last couple of days that it becomes really humid when the rain comes down. But you know what's great? We've been away for so long and my garden is like a jungle. When the rain comes down, it's a great time to just go out and pull out all the weeds. And I swear all my weeds are coming up to about a metre. That's embarrassing, isn't it?
There you go. It's funny you say that because, again, as you know, we as a family went on a family holiday to Brisbane and the Gold Coast the other week. And you're right, it's so tropical, it's so wet, the trees are so big here. And I used to think Sydney was a hot place, but it has nothing on Queensland. Queensland it's like Asia. It felt like, we often joke, it felt like we were in the Philippines or something. It was just so warm and humid over there.
I reckon it has changed, Ed, over the years, because I'm sure Brisbane used to be hot, but it was never humid. But now it's very humid. So you are right, it's very tropical. Yeah. I hate to be living any further up. I mean, Cairns would be really deadly at the moment, so is Townsville. But they've got the most beautiful beaches, which you can't go in because there's so many crocodiles in there anyway. So you can look at the water, but you can't really jump in. So there you go.
Yeah, there you go. Oh, there you go. Now, to our fans around the world, thank you for watching. Be it you're watching the recording or live. Dinh's one of our fantastic meetup leaders and also a finance and money expert, been working in money and lending for years. Now, just before we dive into talking more money and details, we're having a chat politically before. Now, I know you're not a political analyst, but what's happening in Australia right now is our current government is being condemned by both sides of politics on financial mismanagement. And there's a lot of conversation from both sides of politics about an early election. Everyone's talking about it. Even people in the actual party that's going to be elected against is talking about it. Now, I know you're not a political analyst, Dinh, but with the early election, all the weird stuff the government's doing, how does that impact on money and lending? And what are some of the trends and thoughts that you have, Dinh?
Yeah. So there are really good news about the tax cut. We haven't had that for a long time. If you look at the high income people, my goodness, a lot of they're on the highest brackets, which I thought it's in the 41%, and that hurts. And the living expenses are quite high. So it just takes away their borrowing capacity and the things that they wanted to do. And with the interest rates going up, the borrowing capacity is just not where the house prices are. So that's one of the good news. But, regardless what, I've just been back for 2 weeks, many inquiries, people are still looking, the houses are still going up. For years, previously we had that thoughts about every 10 years the housing market will double, which it has, right? And Sydney was leading the way with a different trend where you guys are just keep going up regardless. There's no, stop. And then 10 years later, you double, you guys just going up and up and up. And analysts for years have analyzed that the market's going to burst, but it doesn't look like it, Ed. There is some a slowdown in Melbourne and Sydney, I must admit, but nothing in comparison to what it's been for the last 10 years or so. It doesn't make much impact. It doesn't affect the Victorians or the New South Wales a lot. Brisbane market, though, is another category where it just keeps going up. Maybe we're just catching up to you guys because infrastructure is just phenomenal. We are building housing. One of the friends was talking to me the other day that they're building affordable housing. And also, we have got the major Olympics coming up in 2032. So with history repeating, that's what happened to your market, is that you had the Olympics and then your market just goes up. Ours is going to be exactly the same. That's my feeling.
Yeah. And interestingly, I know this, being an ex-Victorian, I know this topic very well. Last time I checked, it's something like hundreds of thousands of Victorians have moved to Queensland to reboot their lives. And as you know, they're buying houses, they're taking their Melbourne buying power with them. And of course, as well, you know, they're paying taxes there. So it's funny, actually, like, this is an anecdote, but an amusing one. When we were on the Gold Coast 2 weeks ago in Brisbane, we saw a lot of Victorian number plates. There are Victorian number plates everywhere.
Yeah.
Yep, everywhere you see a Victorian number plate.
Yeah. Well, there's a big migration to Brisbane because the housing market is lower, and I think they saw a lot of opportunities that there will be in Queensland, and I strongly believe so. So if there's your opportunity, you might want to move to Brisbane.
Too hot, not too hot, too hot, too hot. It's funny, way too hot. Like, it's funny. We spent about a week. I think it was about a week and a bit all up. Something like, it felt like a while. But we stayed in Gold Coast, Brisbane, and we were like, my God, this place is hot. Now we're back in Sydney. It's like, oh, thank God. I used to think Sydney was a hot place, and I was wrong. You guys love the heat.
At the moment?
No, not really. It's 29 degrees, which is nothing compared to you guys. So, like, to you guys, you probably 29 degrees is when you start getting colds and you got to wear jumpers and that, right?
Yes, that's winter.
Yeah, it's 29 degrees is your winter.
I'll take my puffer jacket out.
Yeah, puffer jacket. You got to take that. Yeah. I just want to check with our fans too. We've got Lamin watching. Sani, welcome. If you just come in, smash that like, share, comment. I'm with Din. Connect with her on LinkedIn. We're broadcasting over Facebook, LinkedIn, Twitter, X, and YouTube. And two, I just want to say, I think you're an amazing character who's in touch with the finance markets. What's happening in money and lending over the next 12 months? I know it depends on what governments do and what markets do, but what are some of the key things that you see happening with lending over the next year? I mean, housing prices are going up. We might get some government tax cuts. We might get an early election, which is good. What are some of the things that you think might play out or you're expecting might impact things?
Some of the banks are coming in quite reserved. They're waiting for all this to happen. So therefore, their policies are a little bit stricter than normal. But you can always have policies that meet certain individuals. Everyone's different. You just have to hone in on each person's situation. So the next 12 months, I'm quite positive about the next 12 months, Ed. I think the interest, I don't think that this is our interest rate and we're going to keep it at this rate. I do think that we will have another increase in the cash rate. Okay. Could possibly be next month because the inflation's still there. That's causing a lot of problems. That's what everyone's trying to control, is to make sure that everyone aren't spending their money and they're saving their money. But with the market going up so high, everyone's feeling a little bit more rich than they normally are, or they are rich, but it's asset rich. And they need to understand that and also coming out from the fixed rate into the variable rate, how much is it going to hurt these people? So in the next couple of months, I think that will give us a good idea of what the market is doing. But with properties, in finance, I'm very positive that we're going to have a good year. It's going to pan out by the end of by 2024, and maybe the interest rate might even come down by the end of 2024. So that way, the borrowing capacity is going to be more. The bank's going to be less restrictive. They might even feel a little bit braver to go out there and offer more. Because as you know, banks do switch off sometimes when the economy is a little bit uncertain. They'll sit there they'll switch off their tap and they'll go, hey, we might not lend too much at the moment. We'll sit around and wait. And at the moment, they do like lending to people with low LVR, which is the loan value ratio. So the loan amount against the asset that you've got. So they like lending to those people. It's less risky.
Fascinating. And the other thing, and again, I'm a more of a political activist, so I want to make sure I'm not corrupted by the spin that I hear. But from both sides of politics, both people within the Labor and Liberal parties, to give some in full disclosure, I'm a member of the Liberal Party, but also I'm very good friends of a few people in the Labor Party, and they feed me information, right? So we sort of share notes, right? Even though we're on opposite teams, we do share a few notes. And interestingly, a lot of the feedback that I'm getting, and both governments have been doing this, especially in Sydney, and I can see this where what in Sydney they're doing is a lot of new properties are just going towards rich immigrants. So as you know, to come into Australia, one of the easiest ways of immigrating is buying a property, right? Easiest way of immigrating into Australia. You know that, right? And interestingly, we're seeing that everywhere. Like you're having immigrants, rich immigrants, which are awesome, coming into Australia, and they're the ones picking up all the properties until the locals boo-hoo. And I'm hearing this all the time. Now, you're obviously nodding in agreement. Can you expand on this issue?
Well, that's the migration rules these days. We are taking a lot of rich people from overseas. And in my area, just in my area alone, you can see there's lots of people that just comes in and buy the properties with cash. And money's no problem. That's the attitude. Money's no problem. So with people with certain visa, the banks won't lend to them. But these people don't care.
Yeah. So if you got $2 million in the bank, buy $1 million property, another $1 million stick out. Just a quick interruption. We've got Felisa Moffat watching. We love you, Felisa. Big wave to Felisa Moffat.
Felisa.
Yeah, we love you, Felisa. Yeah, it's funny that because what's interesting in Sydney, and again, you don't have to be Elon Musk or Richard Branson or Stu Din to pick this. If you just drive down the street, you'll see new blocks, right? And they're just, at the end of the day, they're becoming export revenue. People are immigrating to Australia, buy an expensive apartment or a business with cash, and you're basically in. And I think this isn't, the government's making too much money. I don't see this changing anytime soon. At the end of the day, if the government's making money out of it, they're not going to stop it, aren't they, too?
No, they're not.
No.
If you see the stamp duty these days, like I'm talking about maybe someone that's looking for a property about $3 million, the stamp duty is about $150,000.
Wow.
That's Queensland, but Victorians I reckon if I looked into it, Victorians are probably double that. You guys, your stamp duty is very high.
So, dumb question. Please correct me if I'm wrong. Is stamp duty, is that the tax you pay the government when you buy a property? Is that correct?
That is correct.
Okay.
So a lot of people say, for example, people churn investments. And it's like the share market. You sell something, you pay tax, but their transaction fees aren't very high. So that's fine. They're prepared to pay tax. These are day traders. People who invest, in my opinion, I believe it is best to keep them. Because once you churn the property, you're actually paying the real estate agent.
Yeah.
You're selling one property and you're buying another property, which is exactly in the same market. One goes up, so is the other one, right? You get a good price for your property, but you're buying a more expensive property. And then in that, you actually pay the stamp duty, you pay capital gains tax. So the changeover is quite expensive. An investor normally accumulates and they keep it. If you were to buy a property that's in a dead area, it hasn't grown. Say, for example, you bought somewhere in Gladstone, 10 years ago when the mining industry was huge, and you decide, it'll come up, it'll eventually go up. Well, it won't. that's a dead deal. You get out of it. But you invest in good areas, and if it's a good area, why churn it? Keep it. It just keeps going up.
Incredible. I gotta say, it's a crazy world that we're seeing. And Felisa Moffat, we love you. Felisa Moffat's agreeing, saying, yeah, stamp duty's nuts. So Felisa's there. Now, we've had a great 15 minutes already, and we like to keep quoting Christine Bell, we like to keep our LinkedIn live streams snappy and to the point, quoting our amazing friend Christine Bell. I gotta say, I love your work. Now, just a quick one I want to ask you. If there's, and obviously you cover Australia, you help people refinance, buy houses, vehicles, and that. Tell us a little bit about your services and how you can help people listening.
Well, I've been in the finance industry for 28 years, and I think we had many conversations about this. It's just a career that I accidentally landed into, but really love it when I did. And then going out to do it on my own is a real challenge, but it gave me the life that I really wanted while I have my little young children. But finance, I can do finance for anybody. I can do finance for someone that just has the 5% deposit or no deposit. Now there's criteria for people with no deposits, right? So it just doesn't meet everybody else. But what I like about my work is that coming to this place where you've got the knowledge, the experience, and the people that backs you up is a great place to be. So, and I love working with the health industry. So the doctors, the dentists, generally, because these are graduates where I want to take them from, it used to be pharmacists as well, but pharmacists is just, they don't want to open their business anymore because there's so much competition. But doctors and dentists who are just graduated want to go out for a couple of years and they want to get their experience. And then they come along and go, hey, I want to open my own business. So they set up the fittings and then they buy those chairs. And those chairs cost hundreds of thousands of dollars. They're not cheap, right, for a young person. So we come in, we analyze the situation, we analyze the market, what sort of clientele they're going to get. So we actually provide 100% of those finance for them to start, because these two careers are just like once you graduate it's a guarantee. It's a guarantee. There's no risk. So we're prepared to do that. And I love doing that. It's a long process from when you're graduated to when you become a business person. It takes years of establishment, but that's a great thing. And then I can also, but the established health industry, obviously they have their own relationship managers as well. So once they get to that area, it's pretty hard to break away from their relationship manager, which is good for me because once they're stuck with me, they're just stuck with me. And commercial lending is another thing. I love working with small businesses who operate in their own premises and they want to, instead of renting, they want to buy it. Because, a commercial lease is really expensive these days, and we can do it at a really good interest rate over a 30 years term. So if you compare the rental income each month, it's cheaper than what they're leasing out there. And it appreciates over time. They don't have to pay the rent and the property goes up.
Oh.
Yeah.
Incredible. You are amazing, and thank you for your time. And friends, make sure you connect with Dinh over on LinkedIn. And I know you're a busy lady, and thank you so much for your time. We're honoured to have you with us.
Thank you, Ed. I was having a great time. I thought you would go a little bit longer.
We'll save that for next time. We'll save the anticipation for next time. But just before you go, Dinh, I just wanted to ask you, do you have any closing thoughts or anything you want to share with us? Because we'd love to hear it.
In regards to my plan this year, I've learned a lot. We've only met 5 months, but 5 months in September since we've met, and the lovely Dr. Scott Fox was the one that introduced us.
Right.
Love Dr. Scott Fox. So since I've got on with the LinkedIn, I really love the people in there, the support. I've had not enough chats, I have to say, but the chats that I've had with the people, and they are true leaders. They know what they're talking about. They're motivated. So this year, 2024, that's going to be my strategy, is to be there, show up, be committed, get my vision clear, and follow those vision and show up to the commitment, show up to everything that I said that I would do. And I think doing that just gives me more opportunity to meet other people.
Oh, there you go. Amazing. And I gotta say, we appreciate it. We got Felisa Moffat. We love you. Powerful lady. She's talking about capital gains tax and giving some great rules. So everyone read Felisa's comments. We love you, Felisa. And to Jen, I got to say, appreciate you. I'm so lucky. I know Dr. Scott Fox, and I met you too. So there we go. In fact, I say this, I'm glad that we discovered you too, Jen.
Thank you. And I really appreciate all your help and Lassie's help for the last 5 months. You've done so much for me. You've educated me a lot in LinkedIn. And I really appreciate that. Really enjoy my journey with you both.
Oh, pleasure. Friends, thank you so much. Connect with two. Thank you to our viewers. And if you are watching the recording as well, make sure you smash that like, share, and comment. Thank you too. And thank you, everyone. Love your work all. Thank you.